Good morning, investors, and welcome back to the Stock Sense Morning Brief. I'm Malik, and it's Thursday, November 27th, 2025. After a period of cautious trading, the Pakistan Stock Exchange staged a robust comeback yesterday, signaling renewed confidence. But as always, the devil is in the details, so let's unpack the market's performance and the key factors at play. The KSE 100 index closed yesterday's session firmly in the green, gaining a significant 1,496 points, or 0.93%, to settle at 163,188 points. This was a welcome reversal from Tuesday's modest decline, where the index had slipped by 292 points, or nearly 0.2%, closing near 161,692. Market participation saw a substantial uptick, with traded volume reaching approximately 636 million shares, a massive increase from Tuesday's around 162 million shares. The total traded value also climbed, crossing over 30.9 billion rupees. However, reflecting a nuanced sentiment, decliners actually outnumbered advancers, with 290 stocks falling against 136 that rose and 48 remaining unchanged. This indicates that while the index saw strong gains, the rally was somewhat concentrated. Now let's look at the sectors that truly influenced the market yesterday. The commercial bank sector had a strong positive impact, contributing significantly to the KSE 100's upward movement. Similarly, the fertilizer sector also played a positive role, pushing the index higher. On the flip side, the automotive assembler sector experienced a negative impact, pulling the market down despite the overall gains. From a technical perspective, the picture for the KSE 100 appears cautiously optimistic. A look at the daily technical indicators from TradingView shows that most moving averages are signaling a buy action, suggesting underlying bullish momentum. Both short-term and longer-term exponential and simple moving averages are indicating buying interest. When we consider pivot points, the classical pivot level stands at approximately 162,650. Looking ahead, immediate resistance can be found near 169,000 points, while a key support level lies around 155,300. This suggests that while the market has seen a good rebound, these levels will be crucial to watch for future direction. Moving on to corporate announcements, today is a busy day for board meetings. We'll be keeping an eye on Chenab Limited and Aruj Industries Limited, both holding meetings to review their first quarterly accounts for the period ended September 30th, 2025. Siemens Pakistan Engineering is also scheduled to discuss its annual accounts for the year ended September 30th, 2025. Additionally, Askari General Insurance Company Limited and Haskell Petroleum Limited have board meetings planned to consider matters other than financial results. Now let's turn our attention to the broader economic and market news, which presents a mix of positive and negative developments. On the positive side, the Asian Development Bank has approved an additional $48 million in financing for a water project in Balochistan. This is a crucial step towards enhancing agricultural productivity and water security, signaling continued international support for Pakistan's development. Furthermore, the government's efforts to cut power tariffs, particularly for industries, and abolish the export surcharge are very positive. Lower energy costs can significantly boost the profitability and competitiveness of our manufacturing and export sectors. In a major boost to investor confidence, Barrick Gold has reaffirmed its commitment to the Reko Diq copper project, representing a substantial $7 billion foreign direct investment that underscores confidence in Pakistan's resource potential. However, we also face some significant challenges. A recent report indicates that Pakistan's unemployed population has surged by 1.4 million over the past 4 years. This is a serious concern, reflecting underlying economic weakness and potentially reduced consumer purchasing power. The IMF has also delivered strong criticism regarding Pakistan's fiscal mismanagement, urging immediate steps to combat inefficiencies. This ongoing fiscal instability can weigh heavily on investor confidence and imply stricter conditions for future financial programs. Moreover, local mobile phone production has plunged by 34%, largely attributed to the 18% sales tax. This is a negative signal for the consumer electronics and technology sectors, pointing to reduced demand. While Pakistan is seeking FAO's help to tackle agricultural challenges and water security remains a critical long-term issue, these are more neutral developments, highlighting ongoing problems that, if addressed, could lead to future improvements. Regarding institutional flows, yesterday saw a clear pattern. Foreign investors, or FIP, were net sellers, offloading around $3 million from the market. However, this selling was comfortably absorbed by local institutional investors, or LIP, who showed net buying of approximately $3 million. Diving deeper into the local activity, mutual funds were significant net buyers, adding over $5.2 million. Banks and development finance institutions also showed strong buying interest, with over $3.1 million in net purchases. Conversely, individuals were net sellers, offloading nearly $3.8 million, and foreign corporates also contributed to the selling pressure, with over $2.1 million in net sales. This indicates that while foreign and retail investors were cautious, local institutional players, particularly mutual funds and banks, stepped in to support the market. My take for today is that yesterday's strong KSE 100 rebound, despite the mixed economic news, showcases the market's capacity to react positively to specific high-impact catalysts, like the Barrick Gold commitment and government efforts to reduce tower tariffs. The aggressive buying from local institutions, particularly mutual funds and banks, was critical in offsetting foreign and individual selling, demonstrating a strong, albeit concentrated, belief in certain market segments. However, the underlying macroeconomic concerns raised by the IMF, coupled with the surge in unemployment and the negative market breadth, more decliners than advancers, cannot be overlooked. This suggests that while the index performed well, the gains weren't broad-based. Investors should therefore remain highly selective, focusing on companies with robust fundamentals and those poised directly from positive policy shifts, like industrial tariff reductions or strong foreign direct investment. Pay close attention to ongoing government actions aimed at economic stabilization, as these will be key determinants of sustained market direction. And that wraps up our Stock Sense morning brief for today. Thank you for tuning in. Remember, staying informed and discerning is key to making sound investment decisions. We'll be back tomorrow with more updates. Until then, trade wisely and have a profitable day.